will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number one on your telephone keypad. If you would like to withdraw your question, press star one again. Thank you. Anil Gupta, Vice President, Investor Relations, you may begin your conference.
Good afternoon, and welcome to the Coinbase second quarter 2025 earnings call. Joining me on today's call are Brian Armstrong, co-founder and CEO, Emily Choi, President and COO, Alicia Haas, CFO, and Paul Graywall, Chief Legal Officer. I hope you've all had the opportunity to read our shareholder letter, which was published earlier today on our Investor Relations website. During today's call, we may make forward-looking statements which may vary materially from actual results. Information concerning risks, uncertainties, and other factors that could cause these results to differ is included in our SEC filings. Our discussion today will also include certain non-GAAP financial measures. Reconciliations to the most directly comparable GAAP financial measures are provided in the shareholder letter on our Investor Relations website. Non-GAAP financial measures should be considered in addition to, not as a substitute for, GAAP measures. We'll start today's call with opening comments from Brian and Alicia. And
toward. Our mission is to increase economic freedom for everyone, everywhere. Crypto is eating financial services, and our goal is to be the #1 financial services platform in the world across custody, trading, payments, staking, borrowing and lending, and more. Our focus this year is to drive growth in our core businesses, trading and stablecoin payments, and I want to share 3 key areas that we made progress toward those objectives this quarter. First, on trading. We've always believed that every asset class will move on chain. The customers, technology, and regulatory environment are now finally ready for it. People want to invest capital across all asset types, from stocks to commodities to real estate to crypto, including meme coins and the long tail of assets. And even how startups raise money, and all capital formation is going to be rebuilt on chain, where markets are cheaper, faster, global, and open to everyone. So we've been making investments in this area for some time, and our goal is to build what we're calling the everything exchange. Every asset you want to trade in a one-stop shop, all on crypto rails. This means, to start, we're enabling access to millions of spot crypto assets. This is the #1 thing our customers want from us, and in Q2 we hit over 300 total assets listed on our exchange. Next week, we'll be rolling out the next chapter of our asset addition strategy by integrating decentralized exchanges right into the Coinbase app, which will eventually enable access to millions of tokens. Next, it means offering the most global and compliant suite of perpetual futures and options to meet the needs of advanced traders. And we now have a comprehensive derivatives product suite. We recently launched 24/7 trading of Bitcoin and Ethereum contracts, and we launched perpetual style futures in the United States, which hit an all-time high in trading volume this week. Finally, we announced our acquisition of Deribit, the world's leading crypto options exchange with over $30 billion of open interest. And now we're currently working toward launching tokenized equities to meet the moment in this new regulatory environment. We've always said we're updating the system, and building the bridge to bring equities onto crypto rails is the next phase of our strategy. We may integrate with traditional brokers as a stepping stone towards this vision to provide liquidity, but we believe tokenized equities are more efficient with global coverage, 24/7 trading, instant settlement, and the ability to offer perpetual futures. The total addressable market for this is massive. Capturing just 3% of equities trading would double the current crypto market. Over time, we'll bring all asset classes on chain, including prediction markets, real world assets, and more. And we're building on the frontier, committed to doing this in a compliant and trusted way, which we've done for many years, while making it easily accessible to everyone. So that's the Everything Exchange. Next, let's touch on how we're accelerating crypto utility with our full stack payment solutions. We see payments as the next big use case in crypto and believe that the majority of all payments in the economy will eventually run on stablecoin rails because they are faster, cheaper, and global. Passage of the Genius Act will fuel further innovation and adoption of stablecoins. And we are uniquely positioned because we have both the broadest distribution base for USDC and the best rewards program for customers. We're one of the only companies with a vertically integrated payment stack. This includes USDC, the largest regulated dollar stablecoin, Base, the most popular layer 2 solution on Ethereum, consumer applications and wallets with millions of retail users, and payment APIs to power businesses and developers. Together, these offer a faster, cheaper, and more global payment solution. In Q2, we announced our stablecoin payment APIs, which enable businesses, merchants, and developers to easily accept and pay in stablecoins with partners like Shopify already live in market now. Finally, I'd like to spotlight how we are leveraging our deep experience in building crypto infrastructure to power the next wave of businesses coming into this space. We now have over 240 businesses using our crypto as a service capabilities to power their custody, trading, and payments needs, including BlackRock, PNC, Stripe, and PayPal. We power over 80% of the custody for crypto ETF issuers, and we're a trusted partner to over 150 government agencies and institutions to help manage and safeguard crypto assets with regulated and secure solutions. As the most trusted name in crypto with the longest track record of success, we are the natural partner for any company or government entering this crypto space. So in closing, with regulatory clarity finally emerging, we believe crypto rails are poised to power an increasing share of global GDP and update every aspect of the financial system. And Coinbase is the company best positioned to capitalize on this trend. I'll now turn it over to Alicia.
Thanks, Brian. Good afternoon, everyone. We have long said that crypto is not linear on a quarter-to-quarter basis, and Q2 was no exception. Amid lower volatility and non-Bitcoin price headwinds, we were focused on execution. Our business grew stronger as we grew native units across the board in USDC, staking, and custody. We saw all-time highs in derivatives trading volume, quarterly base transaction volume, prime financing average loan balances. And further, we are encouraged by the positive reception for our new products like Coinbase Card, the Base app, US perpetual futures, and Coinbase Business. Total revenue was $1.5 billion. Net income was $1.4 billion. Adjusted EBITDA was $512 million, and adjusted net income was $33 million. Let's dive into these results. As typical, all comparisons I'll share are on a quarter-over-quarter basis unless I note otherwise. Let's start with the market backdrop. Crypto asset volatility declined 16%, despite the average crypto price market cap being roughly flat. We saw shifting macro conditions, including trade policy considerations and recession concerns, impact risk assets broadly, and crypto assets were no exception. We saw a divergence between Bitcoin and everything else, as the average Bitcoin price in the quarter was up 6%, whereas non-Bitcoin asset market cap declined 11%. In the second quarter, the US and global spot markets declined 32% and 31%, respectively. Our total trading volume declined 40%. In March, we made an intentional price change to our stable pairs in our advanced product. This was in our control, and we made a decision to focus on revenue over trading volume. Historically, stable pair trading was a largely zero-fee product for us. When you exclude the impact of the lower stable pair volume, our total trading volume was more similar to the overall spot markets. Our consumer spot trading volume was $43 billion, down 45%, and consumer trading revenue was $650 million, down 41%. In the quarter, we saw consumer spot volume shift towards simple as opposed to advanced, given the lower volatility environment. Institutional spot trading volume was $194 billion, down 38%. Institutional transaction revenue was $61 million, also down 38%. In the last quarter, I mentioned that we expected $30 to $40 million of impact in our Q2 institutional transaction revenue due to increased investments in incentives and rebates programs that we intended to drive liquidity and market share in our derivatives products. We did make this Q2 investment. However, this ended up being recorded as a transaction expense due to the incentive program's design and the client activity mix. Now turning to subscriptions and services revenues of $656 million. As I mentioned earlier, across the board, we saw native unit balance growth, including average USDC in our products, growth in staking native units, and custodied assets. We also saw all-time high loan balances in prime financing. However, underlying asset prices, specifically in Ethereum and Solana, and protocol reward rates, headwinds offset this growth quarter over quarter. Our total operating expenses were $1.5 billion. Without the previously disclosed May data theft incident and the associated $307 million expense that we recorded in the quarter, our total operating expenses would have declined 9%, alongside the softer market conditions. We ended the quarter with just under 4,300 full-time employees, which was up 8%. I would like to draw your attention to some specific events that materially impacted our GAAP profitability results this quarter. First, a $307 million expense from the data theft incident I just mentioned. Second, a $1.5 billion unrealized gain on our strategic investments. Our strategic investments include our investment in Circle, which is now public. Going forward, this line will fluctuate in line with their stock price. Third, a $362 million gain from the ongoing fair value remeasurements of our crypto investment portfolio. Net income was $1.4 billion and includes the impact of those three items I just mentioned. Adjusted EBITDA was $512 million and excludes those three items I just mentioned. Adjusted net income was $33 million, and we have updated our calculation to adjust net income for all gains and losses on both crypto and strategic investments. We believe that adjusted EBITDA and adjusted net income, while no substitute for GAAP measures, are very useful metrics to assess the recurring operating business results, excluding gains and losses from the investment portfolios. Additional detail can be found in our shareholder letter. Now let's turn to our Q3 outlook. Q3 is off to a strong start with higher asset prices and higher volatility. July transaction revenue is approximately $360 million. We expect our Q3 subscription and services revenue to be within the range of $665 to $745 million, or up approximately 8% quarter over quarter at the midpoint, driven by higher average crypto prices and stablecoin revenues. On the expense side, we expect technology and development and general and administrative expenses to be between $800 and $850 million. Opportunities for growth have expanded substantially with increased regulatory clarity. We are leaning into this opportunity with headcount growth. We do expect higher Q3 headcount growth than we saw in Q2. And we are directing this growth into the product areas Brian mentioned earlier. We expect our Q3 sales and marketing to be in the range of $190 to $290 million. With that, let's go to questions.
Great. So we received a few different questions on tokenization. How does Coinbase plan to implement tokenized securities and compete for market share as demand increases? How can Coinbase ensure risk management compared to traditional finance in tokenized securities? Is there a timeline for stock tokenization or real-world assets? Brian?
Yeah, so first off, we are very excited about tokenized securities, much in the same way that getting a digital dollar, we have a dollar in a bank account and you can mint a token. It's one-to-one backed. I think early on people we're wondering what those would be used for. Hey, can't you already send dollars to each other, right? And so in much the same way, crypto has an opportunity to update the financial system here in the securities world. And we don't know exactly how it'll all play out, but there are interesting opportunities around getting more global distribution of creating some of these securities. There's high demand for US assets in many places in the world where people can't easily open a brokerage account. We think that new types of markets like perpetual futures around these securities could be interesting in a tokenized securities world. Obviously, real-time settlement, 24/7 trading, fractional shares. There could be novel forms of voting and governance that happen on chain. It's really hard to say where this will go, but we think that ultimately getting these assets tokenized on chain is going to unlock a lot of value. And in terms of how we get there, there's a lot of steps. I mean, we will probably have to integrate with a traditional broker. It matters how you custody the underlying assets. It matters, for customers that want to trade with margin or in some of these products, risk management becomes very important, which the question asked about. But that's what we do best, right? A lot of this comes down to, can you hire the right people with the right expertise from different areas of tech and finance to come together and produce these systems? And I think that's what Coinbase has done best over the last 12 or so years. Is we've built products that are the most trusted, most compliant, and they're easy to use for everyone. They don't have to understand that it's on chain. They don't even have to care that it's on chain. They just want to be able to trade these assets and get exposure to them and build the best product. And so that's what we're going to do. We're working hard on it. It's going to, we'll keep you updated over the coming quarters as we make progress. But yeah, that's the plan for now.
Thanks, Brian. Next question. What's the projected growth in terms of revenue as well as usage for the Base app? What's being done to push for a massive adoption of blockchain-based ID on Base for the general public so that Coinbase will compete with more mainstream tech companies like TikTok and Meta? Brian?
Yeah, so I'm very excited about Base. This is our attempt to really build on the frontier with crypto utility, where there's lots of these building blocks have come together over the last really 10 years. Some of them we helped build, others the rest of the industry really helped build. And these are things like a decentralized identity that uses a standard called the ENS. You can have a trusted stablecoin like USDC. We now have a scalable blockchain with Base. There's decentralized messaging protocols, ways for people to build applications, and decentralized social media protocols. So this is kind of a super app that we've put out there. It's in beta. There's actually 700,000 people on the wait list already. And so there's been a ton of demand for it and excitement about it. I think people are the most excited about this idea that as a content creator, whether you produce a podcast or art or video like YouTube, or just text like on X, people can put out this content and earn directly from their audience. That's a big deal. It kind of changes the traditional business model of the internet that was more ad-based, because now the internet has a native money layer. And so, our goal is to get eventually 1 billion people on chain. I think self-custodial, while it's like Base and these new applications that we're building on top of it, can really help us achieve that goal. But it's going to be a long journey. And blockchain-based IDs like a base name, which every user who signs up gets a free base name using the ENS protocol. They control that name. They control all the data and information associated with it. It's not controlled by a big tech company. And so that is a new model that I think a lot of consumers out there are interested in, and content creators as well.
Okay. And then final question, what are Coinbase's strategic goals behind the partnership with PNC Bank? And are there other plans to partner with other banks in the future? Brian?
Yeah, well, the overall goal is really just expanding the market. There's a lot of companies coming into crypto now, and many of them don't want to have to try to go build a lot of this themselves. It's really difficult and complicated to store these private keys in a secure and distributed way, to integrate with the different blockchains that are out there, to trade and do payments and financing on chain. So what they're doing is they're coming to Coinbase, and we've been doing this for a long time. And so a long time ago, we decided to expose the services we built internally for our own products, making them available to third parties as infrastructure, a lot like what Amazon did with AWS. So we call this crypto as a service, or CaaS. We have about 240 institutions now, or companies that are utilizing these Coinbase rails in various ways today. And we just recently announced PNC. It's been great working with them, but there's a lot of others that we're building as well. JP Morgan, we've made announcements around that. eToro, Revolut, Webull. There's a lot more in the pipeline. So, if you're a bank or a broker or a fintech company or a payment service provider or a Web2 company or really anybody, I think eventually most of the Fortune 500 will integrate crypto in some way, just like they all use the internet. And so for those that are out there trying to think about how to do that, give us a call. You can basically just Google Coinbase crypto as a service and find our offering.
All right. So, Kate, let's switch gears and take our first question from the line, please. Kate, let's take our first question, please. Operator, are you there?
While we're waiting for the operator to join, Brian, maybe I could ask you another question.
Sounds good. Let's do it.
Brian, I think that probably our investors are really curious about stablecoins and our payments stack, given the Clarity Act, given the number of new market participants. Share with me who we think the target customers are, how we think we will differentiate in the market, and are we looking to disrupt Western Union? Are we looking to disrupt Visa? Are we looking to disrupt the bank? How do you want to think about our product stack going against other payment products in the market?
Yeah. Well, payments is a big category, right? There's merchant payments, there's e-commerce, there's peer-to-peer payments. One of the biggest areas that we're focused on first is really around B2B payments. A lot of this is cross-border. We think that actually cross-border payments is about a $40 trillion opportunity. B2B is 75% of that. And stablecoins have already started to see some adoption here in product market fit. I'd say there's about $100 billion of stablecoin volume now annually, up from about 0 2 years ago. So it's growing very quickly. And so as we go to market, we're kind of really relying on this full stack that we've put together. Again, I sort of mentioned this in my opening comments, but we have Base, which is the most popular layer 2 solution. You can now do fast, like under 1 second, under 1 cent, anywhere in the world, payments on Base. It's really performant. We have USDC via our partnership with Circle, which is the most trusted regulated US stablecoin. And then we also have these payment APIs we've built for businesses and developers, and we have consumers as well with a lot of crypto in their wallet that they want to go spend in the Coinbase app, now the Base app, even with Coinbase Card, these things we've put out. So I think we're really one of the only companies in the world that has this kind of full stack that we're putting together to try to ignite this. And so lots of companies have been reaching out and asking about how they can make their B2B payments better and faster and cheaper and more global. So yeah, and we announced some of these already with Shopify and others, but there'll be more coming in the pipeline. It's really a big area of growth and focus for us right now.
All right, thanks, Brian. So we're having a little bit of a technical issue. I would ask analysts who wanted to ask a question to please just email us directly and we'll read them on your behalf. The first one I'll read is from Ken Worthington at JP Morgan, who wants to dig into payments and the role Coinbase sees for itself in payments over time. There were 2 big announcements in the quarter, Shopify and Commerce. Are you looking to build an alternative network to Visa and MasterCard that ultimately Coinbase customers make